everyone. Hi, everybody. Welcome to the BULLHOUSE podcast. Today, we are so lucky to have Carol Roth joining us. Carol, we'd just like to introduce you first to our audience. Carol Roth is an entrepreneur with a background in media. She also has an impressive background in finance with a notable accomplishment of raising $2 billion in capital for private companies. Carol is also a writer with a new release coming out June 29th, The War on Small Business. Carol, thank you so much for joining us today. Is there anything you would like to add to your introduction?
I mean, Lord, that could take 9 hours, but I guess the most important thing is I'm just happy to be here, so thanks for the opportunity.
Thank you so much for joining us. So we'll just jump right into it if you don't mind. In your last Fox Business interview with Charles Payne, you spoke about short selling. Can you give us a brief overview of short selling for our listeners?
Sure. So the concept of short selling, and I'm going to just kind of go down to the nitty gritty for anybody who maybe doesn't understand. So apologies if you already know this. But basically, normally if you think a stock is going to go up, you would buy it and you would hold it until you thought it had reached that value. Then you would potentially sell the stock if you thought it was going down. But if you don't own the stock and you do think that the stock is going down, you have to have some way to access it. And the way that you access it is through a mechanism called short selling, where you're basically borrowing it, usually from an intermediary that has it either in street name or from another client, and you borrow and you sell that stock with the obligation to return that share in the future. This is a really risky practice because you can be completely right about a stock, its fundamentals, maybe even something like fraud, that it eventually will go down. But if you don't get the timing right, it can be a big headache for you because you have, in terms of the amount that you can make, whatever price you sell it short at, you have between that price and zero to be able to capture, versus potentially unlimited upside as the stock goes up. So this becomes a very risky short proposition. And it's why usually people who do short selling do it for limited times or are very specialized in it. And a lot of the shorts who do it professionally usually have a thesis around an area like fraud.
Thank you. Salty, I think you have the next question.
Yep, sorry, I was muted there. I was wondering if you could briefly touch on, we just talked about regular short selling.
Yes.
And now I was curious if you could touch on naked short selling a little bit.
So I had a feeling, Salty, that you were going to ask that question next. Seems like that logical outflow. So, the concept of naked shorting is, as I just told you, that when you're going to short sell a company, that you need to borrow that share from somewhere. The concept of naked shorting is that you actually go ahead and you sell the share without borrowing it first, or in some cases even identifying that it exists somewhere to be borrowed. And that is a practice that was actually made illegal. I believe it was out of the last financial crisis, the Great Recession financial crisis, because a lot of Wall Street folks turned on other Wall Street folks and ended up piling into Bear Stearns and Lehman Brothers and helped to basically collapse those financial institutions. And so at that point in time, they said, well, that's not so great. Maybe we should make that a practice that's not legal. That being said, there are certain exceptions in the market, usually around market makers. I think in terms of market makers, particularly who underwrite options, that they have the opportunity where they may lend out a share before they actually have that in their possession, and that's called naked shorting. And the thesis behind that is that we need these market makers to be able to be liquid and make sure the markets are liquid. So we're going to give them an exception and hope, because they don't want to collapse their own businesses, that they're just going to follow the rules on there. So that's where naked shorting comes into play. It's possible that a short seller does the naked shorting, but usually it originates, again, because it is legal at the actual seller's level, it usually comes through their brokerage firm, their brokerage relationship.
So let me ask a follow-up question over here on this one. So you just mentioned about public exchange brokerages. So is it possible? Obviously, we've seen this happen with these two stonks, and it's also not just these two stonks. I think it's market wide, right? There is a insinuation happening from a trading or usage of an underground or under the table or OTC, which is a dark pool, when they're doing these trades that are happening. Could you kind of talk about the dark pool side of short selling and how that is connected? Because these are all sort of connected in a sense. And there's a lack of transparency here that, it's obviously meant for everybody, but it's technically really not meant for everybody. It's more prevalent. But at the same time, I want to understand from what you've seen in your experience, and also for our viewers as well, right? Dark pools are usually preferred by big guys, the banks and the brokers.
Right. So basically, I'm going to do this with a disclaimer that I am not a trader. I'm more an investor, and I've also come from the investment banking side, not hardcore trading or settlement side. So this is basically what I've learned at sort of the macro level. Every single nuance of it, I am not going to be able to tell you because I know what I know and I know what I don't know. But basically, the concept of dark pool are exchanges where the participants, which are usually big players, hedge funds and the like, trading with each other. And you're right, the whole reason why it's a quote unquote dark pool is because of the lack of transparency. They want to get rid of big blocks of shares, or they want to have trades where they don't want to move the markets. They're doing it in a way that is less transparent so that they can execute the trades and not have that information available at the moment, which, as we've all been talking about from a transparency standpoint, is not a good thing. If we want to have free markets, information should be available to everyone. Now, I do believe, obviously, they still have reporting requirements. And so, at the end of the day, for most players, they still eventually have to let that information come out in some way, shape, or form and do the appropriate reporting, and still, should be skirting the rules. But obviously, as we all know, when you have a close-knit group of people, there's just a little bit more room, and again, I'm not going to call any particular individual or group out. It's just to say it's less transparent. Let's just put it
right. And so just to add to that point again, right? So we're talking about the lack of transparency and the prevalence of it being out here for years, decades, and you kind of mentioned it, they are regulated. Now, given that this one piece is supposedly a supposed fair market, right?
Right.
It obviously is not a fair market for the retailers versus the big guys, the ones who have all the money, who go through these high frequency trading, right? This whole dark pools. Can you speak to the unfair state of these resources that we as retailers have versus these big hedge funds and these banks? And then Tiers, who's also on the call, he has another question kind of related to dark pools. So he'll also ask that question as well. So Tiers, could you ask your question about the point you wanted to make?
Yeah, thanks for your time, Carol. I've been following the dark pools and the FINRA OTC, reports quite frequently each month when they're reported. Last week, I found out of a thing called ping pools, and apparently this is direct institution trading away from a dark pool or the open exchange. I've only scratched the surface, doing a little bit of sleuthing on the internet. I was wondering if you could maybe give us a little insight, if you have any, regarding ping pools.
Yeah, so I have literally no insight regarding them.
Fair enough, yeah.
Just total transparency. I'm not the type to fudge my way through something. If I know it, I know it. If I don't, I don't. But I do want to speak to the concept of fairness, because I think there's two sides of this, right? So there's what I would call free market unfairness, and then there is tilting the playing field unfairness. And I think the nuance is really important to discuss, because it's kind of part of this whole like macro discussion of the big guys versus the little guys, right? So when you think about free market unfairness, if somebody has invested in superior resources, or they've done extra research, or they've, all these kinds of things, there's always going to be some level of quote unquote unfairness or an edge if somebody's doing something professionally versus somebody doing it as an amateur. Like, you're never going to have anything that is completely fair from that standpoint. And you don't want to do that either, because you want to incentivize people to make those investments. But you need to do it in a way that affects the second piece, which is like the basic rules of the market being fair for everybody. And I don't believe having lack of that kind of lack of transparency seems to be consistent with the fairness. And there are all kinds of other things that aren't fair either that we've seen. If you go back to February of 2020, when the COVID situation was unfolding worldwide and we're trying to figure out what the impact was going to be in the US. If you recall, the markets in the US actually, like mid-February, had hit an all-time high. They were doing very well. And then by the end of February, like everything just completely, like in one fell swoop, collapsed. And so, it's like, oh, well, like how all of a sudden did that deteriorate so quickly? Well, it was later reported by the Times that there was this sort of think tank discussion that was hosted, and a couple of people from the administration were there. And they basically said, yeah, the situation's much worse than, has kind of gotten out to the public. And an institutional analyst, hedge fund analyst, wrote up a report and first circulated that to an internal group of people before that hit Main Street. And insider trading is supposed to be illegal, but like we see this all the time. Every time there's a report for anything that comes out, you can see the market move before that information hits the media, hits the tape. So there are all kinds of things where we know there isn't that kind of fairness, the fairness that like everybody should be getting access to the information at the same time. I actually, if you guys want to talk about it, wrote a piece about insider trading, how that actually could help level the playing field if you got rid of those rules. But I think you have to kind of differentiate between like, what is it that people have invested in and created, potentially innovations, but then what is also taking away from the concept of that free and fair market. And I think anything that goes, against transparency, like you'd have to make a pretty good case to me as to why that doesn't, why that would be fair and in support of a free and fair market.
So insider trading obviously is kind of a hot topic.
Yes.
In the sense, and Robot actually had a question kind of piggybacking off of what you just mentioned.
Yes.
Robot, you want to quickly ask the question and we can just jump into
sure.
other.
Yeah. Hi, Carol. Thanks for touching on that insider trading piece, because I wanted to follow up on that, because since you had your interview with Fox News, I know that you've been catching a little bit of heat from Twitter from an article that you wrote back in 2012 in support of legalization of the insider trading. So now I want to ask about the free market. So with all of the loopholes that market makers have going with them, so short selling, naked shorting, dark pool trading, this new ping trading that we're hearing about, and the indifference of knowledge and skill and resources, how do you think now the legalization of insider trading would affect free market and equality? Like,
yeah,
encourage, right? Like new traders that are coming on, it's quite an intimidating thing for them. So how do you think that would affect it?
Yeah, so again, equality, I'm always talking about equality of opportunity, not equality of outcome, because obviously that's based on different inputs. So I think it's important to differentiate that. Okay, so the other thing I'm going to talk about when this whole insider trading is, yes, I wrote that article in 2012. And I'm like super nerdy academic, and I love to have these kind of like, you know, theoretical, interesting discussions like, oh, like how would this affect this and how would this affect this? Of course, nobody reads the actual article and they read the headline and they think it's some kind of gotcha. And it's like, no, I probably wouldn't write the article today, not because I don't believe the same thing, but just because I know that people don't treat the media and anything that somebody says the same way today than they did in 2012. I think people back then were a little bit more thoughtful and nuanced, where now it's like, oh, you said this, and it's like, read the article. But I like to like kind of play a little game with you guys to start with this. And again, my caveat, this is just like an academic discussion. If you don't agree with it, like I don't care, I don't actually spend any time thinking or talking about this. It's just kind of a fun discussion. So let's say I had a painting, okay? And I want to go to the flea market and I want to sell it for $100. And I have buyer A who comes by and he offers me $100 for it. And then I have buyer B who comes by and he offers me $100. Any worse off if I sell it to A or B? Let's go around the room. Lady loves stunts. Marissa, what do you think? Am I worse off? I offered 100. They both said, okay, I'll pay 100. Am I worse off if I sell it to one or the other?
No.
Okay, robot?
I don't think so.
Tears?
No, not at all.
Okay, Salty?
Yeah, that seems like pretty even to me.
All right, Indian dude?
It depends.
Okay, so he knows where I'm going with this, but okay, so so that's scenario one. I'm gonna do a scenario two, so then we'll find out. Okay, so scenario two is the same scenario. I've got my painting for $100, and so we find out later on that buyer A knows that it's a Picasso worth $1 million, and buyer B just thinks it's pretty. Am I worse off? I get $100, which is my asking price, if I sell it to A or B. Marissa, does this change your answer?
Sorry, yes.
Okay, why?
Well,
you have information, right?
You now have insider information.
Right.
But I'm not
Like
saying am I worse off? Because I was going to sell it to either of the guys.
Right, but then it wouldn't be fair any longer.
Yeah,
Because now I know how much it is.
Carol wouldn't be worse off. She's actually in a major advantageous situation right now, right?
Absolutely.
Yeah.
We're gonna get to the third point. So we're gonna get to the third point. But just like so I sold it to two people. Later we found out that one of the guys knew something about it. Am I worse off? Robot?
You yourself are not worse off. I think there's advantages to the situation for all parties, but you yourself are not worse off. You're still in the same position.
Right, okay. Salty, am I worse off?
You would be better off in this situation.
Oh, I would be better off. I still got $100. I kind of feel like I'd be the same. Okay, so then let's go to the third scenario. So let's say I'm selling my picture for $100 and all of a sudden like 90 people rush to my booth and they're like, okay, I'll give you 100. I'll give you 100. What happens in that scenario? Marissa?
It ends up like the apes that are currently in the short squeeze buying AMC at $5.
Yeah. It's supply and demand, right? So if you have a demand of 90 people wanting it, therefore you could increase the price and sell it for a higher price point.
Yeah, and I'm also thinking to myself, like, why do all these people want this? Like, what do they know that I don't know, right? Okay, so this is what we just talked about in terms of like, that's like an insider trading scenario. So if I'm going to sell something in the stock market and we all agree that getting information to market more quickly helps the market to be more efficient, we want to incentivize getting that to market more quickly. Also, more like as a seller, if I'm going to sell this for $100 and I sell it to you and you know something and I sell it to some other dude who doesn't know anything, like it doesn't matter. I got my $100. I set the price. But what happens is that if more people are incented, or if I get somebody who's like, hey, I want to get a lot of that gets the information to the market. Okay. So this is like the foundational situation. So right now, insider trading is like quote unquote illegal, kind of like naked shorting, right? Is quote unquote illegal. But we know that big players do all kinds of things that probably is considered insider trading. They're privy to information, just like that scenario I gave you that happened in COVID. And sometimes they're going to say, oh, well, that was my research. Well, was it really your research, or did you know somebody? So if we leave it as illegal, it gives them a much bigger edge because they're the ones who are willing to take the risks. But if we just opened it up and everybody was incentivized to do that, we'd get that information more quickly, and the big guys would actually have less of an edge because it wouldn't be just them who were doing it. So again, this is an academic argument. I'm not talking about sort of the morality of, taking information that a company, if you have an NDA in there. I'm not talking about Congress because that's a whole separate thing, but just sort of the academic that, like, if you want to get information to market more quickly, you want to remove the barriers and you want everybody to have that incentive to get the information.
That's a tough way to go, because if you're basically saying this information should be public to everybody, should have the same sort of weight, everybody has the same information, then you technically nobody is like, you won't have the supply and demand will be it'll neutralize itself, right? Because everybody has the same information, you know when it's going to come out. It's a situation where in the 80s, where you had one of the first insider trading things that took place, from what I can remember, and the stock market basically, I can remember it crashed, and the insider trading aspect of it is even with academic, it's a little touchy, because it's still a frowned upon thing. If you have wealth, it's easy for you. If you don't have wealth or availability to get data or information, then you're always going to be at a disadvantage.
Okay, so let me refute two of those points. One, that's not necessarily the case. There are all kinds of people, right? You have somebody who works in the mailroom somewhere. They may have access to that type of information. It just encourages people to seek out that information. So yes, it's different, but it's not necessarily just one person has access to it. But I think the bigger piece is that it takes away the edge, right? It takes away the differential. Because only a few people can do it, that becomes, when it happens, very valuable. If they can do it more freely, you know how it happens, right? Human nature, greed, they're going to do it at a bigger scale, and that information's not going to be as valuable to them. So again, as I said, like, I don't care if people agree or don't agree. It's a purely academic argument, but I guess the point is, it's not like a nefarious. The article wasn't like a nefarious, like, oh, like we should, insider trading. It's an academic thing. It's something that I studied, with different professors, and just think it's actually kind of, it's counterintuitive, but in a sense, like going back to our flea market thing, right? If you've got 90 people who are rushing in with information, that's now told you at the seller something valuable that you wouldn't have known if there was just one guy who had that information. So,
right. And go ahead, Salty.
Yeah, no, I just wanted to ask really quick to summarize it. On your side, it seems to me you're more of an advocate for a competitive market, correct? A much more competitive market, right?
I think so. I think that if you think about pure free market capitalism, competition always benefits the level of fairness in there. If anytime you don't want something to be fair, is what you put in place are restrictions. So I think that, and again, I'm not talking about like you shouldn't have any laws. There still should be rules of the game. But if you're like restricting certain behaviors, you restrict something to get less of it, right? Like that's the basic tenet of restriction. So to create more fairness, more openness, that you would want to reduce those barriers and restrictions. So that's the basic tenet of it. And again, as I said, like, you don't have to agree. You could think that's stupid, but it's certainly not malicious in any way.
No, I'm curious, actually, just a genuine curiosity, actually.
Yeah.
So I just wanted to ask one more question, and then if Mark and or Tears and Indian wanted to continue on, you were saying that by legalizing insider trading, it makes it more competitive and therefore kind of takes away an advantage in a certain sense because everyone is kind of available to it. But
right, it's also thinking about risk pricing, right? If something's illegal or borderline illegal, you're only going to take that risk if there's a high payoff. If it's not, if it's legal and you don't have that, that reduces the risk premium, right? To go out and get the information. So the cost that you have, that you'd want to get in order to get information and get it to the market is much lower. So those big differentials of like somebody making a big trade goes away. You know what I'm saying?
Yeah, so it kind of makes it reduces that factor a little bit, is what you're trying to say.
Right. It's all about risk pricing. Everything in a normal market where the Fed hasn't completely disrupted the concept of risk, everything's about compensation for risk. You only take risky actions if there's the appropriate reward on the other side. So it's really about that level of risk pricing.
Okay. Yeah, I could see that. But so how would you say this affects the retail aspect of it? Because in my head, I'm just imagining a situation from a few weeks ago where a politician found out about a government contract with a public company, and they hopped on some options trading, bought a bunch of calls for the week where this thing was going to get approved, and these politicians made quite a bit of money off of this, and that just to me immediately sparks the question, like, and I'm following this like an academic perspective like you, so I'm not.
Yeah.
So I have it in that sense, but how would an everyday person, a retail investor, get access to this information by making it, you're saying make it more competitive, right? So how would an everyday Joe Johnson from down the neighborhood get access to this kind of information that's usually, behind closed doors or not available for several weeks after sometimes these guys know about it, right?
Yeah, so it's a few things. So first of all, there's the concept of my discussion, the academic discussion on the markets, which is different, as I said, than like Congress trading on it, or like a moral, like you breaking an NDA with your company, which I'm not in favor of. This is more of just like a market, kind of getting information and market kind of discussion. I don't think personally that people who are in Congress, you're supposed to be representing your interests, should actually be able to be trading stocks at all. I think everything should go into a blind trust. So that's kind of a separate issue, but from a getting information and market quickly standpoint, if we open it up and said, okay, you can trade on everything, like you'd know instantaneously, because people are greedy whores, right? Everyone in Congress is then going to rush out and buy these things, and all of a sudden you're going to go, what is going on with that market? And so instead of one person benefiting, it's going to start to like squeeze that down. And then obviously from a retail standpoint, you would have access to not the same things, but you might have access to different levels of information. So you're not going to seek out that same type of information because you don't have an edge there, but maybe you work in a retail establishment. Maybe you work at, Target or the Gap or something like that, and you're seeing that traffic counts are going down, and maybe you're making calls around to other stores to find out if their traffic counts are going down as well. That's a different kind of information that you would have access to that maybe somebody in that position wouldn't have access to. Okay. So it's kind of, it's kind of that thing. But again, from a standpoint, like the whole Congress representing us thing, that's a separate issue. That's not about getting information to market quickly. I wouldn't have people in Congress doing any trading, because I think that that's a major conflict of interest. Yeah,
I actually support that. I support that, your point of view there. Yeah. Okay, thank you for answering that.
I mean, was that interesting at all, or I don't know?
I think so. Yeah, I think you bring up a valid point of view.
Okay. Yeah. Cool.
Tears, did you have a question?
No, I think she pretty much she covered it there, and I would just add to her thing is, like, I strongly believe in competition. Competition inspires innovation.
Yeah.
And I strongly believe it, but I also believe there has to be a firm set of rules in place, you know, for the tools and stuff that say market or whatever, you know, space you're talking about. One thing that kind of bothered me, I'm going to circle back kind of to the dark pools. And if you look at the definition of a dark pool, it's designed for block trading or large sum of
Right.
trading and whatnot. And if you actually go on the FINRA reporting and look at the volume on every ticker across the whole market, it ranges from 30 to 60% of the total volume of each day going on. And you actually do the simple math of the amount of trades that took place and the shares that actually were traded, the average block size is 225 shares. It's not 10,000 shares, right? So this is where it brings into the competition thing is then, so these tools and these systems are created for these institutions that look on paper that, yeah, they're supposed to be good, help the market and whatnot, but then they manipulate them and use them in a way to their advantage that is not to the advantage of everybody in the market. You know, just for me is like, what can, I guess, retail investors do about these things, and what can we do to, you know, maybe get some legislative or progressive change in the markets when it comes to these things, because they're using tools that they design that aren't being used currently right now, right?
Yeah, and I think that's right. I think that you know, as I've been saying, the most important thing that you should do is be specific. And I would go after one or two things and get sort of consensus over those, because it's more easy to affect change kind of one thing at a time than it is to like try to do a huge overhaul. Like we all know this, right? If you're trying to achieve a goal, you break it down into little, you know, chunkable milestones. So I would say, like, what do we think is the most egregious thing? And then really kind of come up with the parameters. And as I said, like, I am not savvy enough on the specifics to be an effective enough advocate. I think that you should probably get some folks who are, you know, big, not only big time traders, but people who deal with the settlement side of the equation as well, because there's probably nuances there that we don't understand, and that I've also heard from, you know, some folks there. The problem with legislation is, so we want to have the guardrails, right, that you're protecting the core tenets of what you have, the competition, the fairness, property rights, and the like, but you don't want to create an issue where no good deed goes unpunished. A lot of times that when you create regulation, that if you don't have a lot of thoughtful strategy, or worse, it ends up getting crafted by people on the inside, which is usually what ends up happening, is that it often has the opposite effect of what's intended. And I've used this example before, but the worst case of this was reining in the banks after the Great Recession financial crisis. Is obviously there were these bad actors, and they said we have to put all these regulations in place, and they put in Dodd-Frank. And the outflow of what happened with that, because again, everybody's trying to compete for their own interests, and unfortunately a lot of the regulators have a lot of the insiders on there. There's a lot of cronyism going on, is that you ended up with legislation that killed small banks. So you had fewer small bank starts, you had a lot of small and community and independent banks that went away, and small business lending went way down while big business lending exploded. So, you know, that was supposed to rein in the big banks, but it gave them free rein. So those are the kinds of things you have to really get people who are thoughtful and strategic. You have to ask yourself, like, where could this go wrong? One of the questions I've been asking some of my trader friends and people who used to be short sellers about, you know, some of these, like, you know, naked shorting situations. And I don't know if you guys are familiar with the Archegos hedge fund that blew up.
Very familiar.
Right. So, you know, I asked about that, and I said, well, you know, how is it that this guy went out and he got leverage from all these different people? And, you know, smartly, my very savvy friend said, well, on the opposite side of that, if you had all of these banks calling each other up and checking stuff out, then you'd have collusion. And I went, oh yeah, okay, that's right too. So, like, every side of it has a flip side. So it's really like playing that chess game of, like, where are the things that can go wrong? And unfortunately, I mean, here's the biggest problem we have, guys. And this is why I like, even though, like, I just met your community recently, you're so thoughtful about things. I love it. It's because like people don't have nuance anymore. And I feel like you guys really have that sense of nuance where you're willing to go deeper into things. Because usually you'll get like a piece of legislation and it'll be titled something that sounds really nice, but then when you get into the specifics, they've thrown all these other things in there and all these things that are
Loopholes.
anti-competitive, right? And loopholes, or just like straight up, like I always call it, my favorite is the fluffy puppy bill that ends up killing cats, right? And it's like, oh, you hate puppies because you voted against that. It's like, no, I just didn't want to kill the cats.
Yeah.
So, you know, I feel like
there's a big piece here, Carol, like you were talking about this, and it's the legislation aspect of it, the law aspect of it is something that I want to touch on. I want you to answer as well. Is
yes,
we have laws that protect the less fortunate, the little guys, and you know what happened in January. You're fully aware of what happened this January, end of January, what happened with both these stocks, especially GameStop. We're not done, like you said. We know what the hell's happened. We know exactly what took place, and there were enough reports out there letting us and leading us towards the situation where the wealthy basically have allowed the retail investors to stay down, and you know, it's like a dog, puppy, you know, good boy kind of situation. At what point do retail get their just desserts, and how can we be protected from civil or criminal suits? Because I'm sure you have friends, and you mentioned you have friends and whatnot. So I want you to help us, our audience, also understand like where this thing is potentially heading towards, and what's your view of what happened back in January? I would love to genuinely understand that.
Yeah. So I mean, I think the first thing is, one of the important things is that don't make it wealthy versus non-wealthy. Make it about free markets and fairness, because at the end of the day, like, I want you guys to all be wealthy. And you, hopefully, some of you that may be a thing, for some of you it may not, but like, if you want to, like, wealth is not an evil thing as long as the rules of the game and the way that you're getting it is fine. And that goes back to the legislation piece and creating the right guardrails, right? And creating a situation.
You said transparency. That's not there. Like, because the reason I'm saying this is, it's the nerve that is hit with just us retailers, right? We're not wealthy.
Right.
99% of us are not wealthy.
Yes.
So if we're trying to acquire a little bit of the cake that has been made potentially for us with the right flavors and the right toppings, why can't we get a little bit of the icing? Like, why can't we get a piece of it?
Yes. So, okay, so this is what I'm telling you. This is what I'm telling you. So the communication has to be not, I'm against you. It's, you know, I aspire to be like this, and we want fairness so that we also can participate and do the things that you're doing. Don't make it like a one versus the other, because in the reality is, and obviously it's slightly different from selling one stock to another, but if we're growing the economy, we're growing the pie, there's plenty, like, for everyone. One person's piece shouldn't have to come from somebody else's piece. And so I think it's making the communication about, this is, we also want to participate in this, and so here are the issues that are preventing us from doing that in the same way, and here's the advantage that we feel like you're getting, that we feel like we have the right to share in, you know, a free capitalistic market. And so that's what I'm saying, like, honing in on one thing about transparency, or one thing about, you know, a certain loophole, and getting that one thing done in a strategic way that doesn't have the unintended consequences, I think is really huge. I think another thing to protect yourself, guys, is always, as we're, you know, talking about specific stocks, is always just be super clear. Like, this is not financial advice. This is, I'm just sharing my personal experience. Like, do what you want to do, because I do worry about them coming after you. If they do, I'm going to go fucking rip shit on them, because that's fucking bullshit. Mm-hmm. But, you know, the fact that all the stuff's going on, you guys are trying to make a point, and you've got the SEC and people being like, well, we have to look into the retail traders. It's like, come on, like, did you miss the whole plot here? So always just use the CYA language, the cover your behind language, right? so that anytime somebody says, well, you were out pumping this or you were doing this and that's not allowed, you could say, no, I'm just sharing my own personal experience, and I said this wasn't financial advice. So like always do that. And just keep doing. I mean, building wealth is a longer road. It's something that doesn't happen overnight. Yes, there are these unusual blips and things that are happening now where people have seen fortunes pop up in short times, but there is a longer trajectory. And I will say a lot of these things, these inconsistencies in the market, are things that affect more of sort of a trading mentality than a long-term investment mentality. So I'm not telling you not to do it. You do whatever works for you. I'm just saying also, if you want to build wealth, have that longer-term view and the longer-term trajectory. So those are the things I would say, like change the communication style, because you'll win more people over with it, even though you're saying the same thing. Focus on one or two things. Let's like get one or two things done first and then move on to those next things. And then cover your own behind and take a long road in terms of kind of the roadmap to building things. And I will tell you, just not that you really asked, but in terms of building wealth, you have it right, because the way to build wealth is through ownership. So whether you are owning your own business that you're investing in and building value there, whether you're working for a company that you might have an opportunity to have an exit and you're able to acquire stock options as part of your compensation, or doing what you're doing in terms of investing in companies in the market, you can do all those kinds of things. Those are really the true ways to kind of get to the next level, is through that ownership. So, have that continual approach on doing that. And,
Right.
and over time it will happen, but the frustration along the way is real. And I think that you're hitting on the right things. And as I said, I'm really impressed at the way that you guys have been
Thanks.
doing it. It's really inspiring.
Can I ask you a quick question, Carol? Just,
Sure.
regarding the competition, insider trading and whatnot,
Yes.
what are your thoughts on conflict of interest that is going on currently in the SEC, the DTCC, the OSCC, the NSCC, and the list goes on? You can even look,
Yeah.
Jay Clayton, the former chairman of the SEC, is now the chief legal officer of Citadel.
Yeah, so like here's the thing, and this becomes where I don't have a great answer. I wrestle with this question a lot.
Yeah.
Again, kind of from an academic standpoint, is like, on one hand, conflicts of interest are horrendous. You don't want those things because we all know what happens.
Yeah.
On the other side of it is you also want people with domain expertise, and people with domain expertise are going to be conflicted. So I don't have a great answer on how you solve for that. Perhaps with rules of, in terms of lobbying, or how many years between posts that you can do certain things that make sense. But the problem that we have in government, from a macro standpoint, is that you have a bunch of morons who don't know anything making decisions.
That's very true.
That's not a good outcome, right? So if you have something that's so complicated, like the stock market, and you want to compete with this, the guys who figured out all these crazy things, oh, we should do a dark pool, we should do this. You need somebody who has a sense of what's going on there, or it's not going to be effective at all. So maybe how would you just think through, how would you incentivize somebody who is in the industry, who's making money hand over fist, to do this position and do it in a way that's ethical and helpful, and still get that level of domain expertise. That's not an easy problem to solve for, and something I wish I could spit out the answer to you. But those are the kinds of questions that you guys should be spitballing and be thinking about amongst yourselves. And maybe somebody's got the right answer, but those are the two sides of the coin, right? Is either you get the person who has no idea what's going on, they can run circles around them, or you get somebody who's on the inside and then they have the conflict.
For sure. I'd probably more look at it from like a PhD point of view within the markets economy and stuff like that, and then have a serious non-compete after their tenure with the governing body, if it's 5 to 10 years or something like that. Like I'm
Sure.
Canadian, and like even our judicial system, you know, if you become a judge, you know, you serve until you're 75, and then you're forced into retirement, and you actually aren't allowed to practice law anymore. You still have your law degree, you can do mediation, arbitration, and whatnot, but you actually can't practice law as a lawyer anymore, right?
Yeah,
So
but so on the flip side of that, you'd have to compensate them well enough to
yes,
be able to make that trade-off, and that's where things get like, oh, well, why are we paying this person so much money? Well, we're paying them so much money so that they don't feel like they need to have the conflict of interest, right?
for
So
sure.
so that's kind of the flip side. If you're somebody who like works in a freaking hedge fund and you're like making money hand over fist, you got to pay the guy enough to be willing to like put those guardrails up.
For
So,
sure. Yeah,
you
I
know, I
agree.
think that again, that nuance is like, well, we don't want to pay them that much money. Why do they deserve that much money? Well, they deserve that much money to make the markets free and fair and trillions of dollars go through the market. You know, that's the answer.
Okay, fair enough. Yeah, it's definitely it's a sensitive situation to try to figure out, or the right balancing act, I think is the word I was looking for. But yeah, thanks for your input there. I appreciate
Yeah,
it.
no, it's really great question. As I said, love to kind of think through those kinds of things because it's a little crazy,
Well, just it's almost at the bottom of the hour. I just want to make sure you're doing okay. I think that's all the questions we had for you. Um, Anything else you have, a lady, Ro or Salty? Anything else you guys have?
No, I think our questions were covered. Thank you so much, Carol. We appreciate it.
No,
Thank you.
my pleasure, guys. You really great questions, and I hope that my answers were helpful and gave some food for thought. And can I be a capitalist and plug my book?
Yeah, of course. That's why
Sure
you're
thing.
here.
It actually, you know, really the only way, it's so funny because you guys have been so sweet, and people are asking me like, oh, how can I do it that would support you in the best way, which is so nice. So I'll tell you the same thing that I tell everyone is that I got a big advance for writing the book. So like I get that no matter how many books are sold, which is fantastic. So it's not really, it's about supporting me as it's much about supporting the message. And this is where I'll kind of just go into a little thing about capitalism is that, you know, where you spend your dollars is important because that's a vote. And so not a lot of people wanted to hear a book about the small guys and about small business and about the Fed selling out Main Street to Wall Street and all of those kinds of topics. And my publisher at HarperCollins took a chance because of what happened with COVID. Without that, I'm not sure if they would have. But obviously that changed the game and kind of shut down all this stuff. So supporting it really supports the advocacy of the little guy and lets publishers know that there's a market out there for that information. Plus, if you like the things that I've been saying and the way that I think, I just feel like you'll learn a lot. And again, you probably won't agree with it all, but at least hopefully will spark a good conversation. So the book is The War on Small Business. It's available for pre-order now. It's coming out on June 29th. You can order it pretty much anywhere. And if you are particularly in the United States and you want to support a small business, bookshop.org lets you order online and they will fulfill from a local independent small business so that you can vote with your dollars back to a small business. But
Great.
yeah.
That's awesome. I love pay it forward
Thank you
programs
so
like that.
much.
Those are important to me in any business. So
Awesome. But thank you guys. And anytime you want to have chats or you have questions, I'm, as I said, super transparent and easily accessible. So if I know, I'll tell you. If I don't know, I can try and find an answer for you. I'll do what I can to be helpful within reason.
that's great. Thank
Great.
you.
Thank you so
Thank you
much.
so much for your
All
time.
right.
Carol.
Appreciate your
Thanks,
time
guys.
today.
Okay.
You're
Yeah,
welcome.
thank you. I'm going to stop the recording. Thank you guys for listening.